So I've been producing a chart showing that global liquidity tightened and it has a 10-week lead time. And that should mean that at the end of the year, we get a correction. Now, that would not be surprising. Let's say Bitcoin gets to 120, it corrects back down to 100. I mean, that's just normal course of business. But Twitter being Twitter is losing its mind over this correction. I get messages, is this the one? I'm like, calm down. You should be expecting at least another 4 or 5 of these over the course of the next year. They're just regular, but for some reason that people are losing their minds. But once that's out of the way, usually it should be good.
It's
right?
a bull market for everybody but me.
It's what your friend owns, not what you own. If Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. This is shit.
Pal introduces a humorous term, the banana singularity, to describe a future phase where the market goes bananas. He anticipates this point will arrive in early 2024 as speculative fervor and liquidity drive the market into overdrive. For now, however, the crypto market is marked by pockets of exuberance that cycle between assets, leaving many investors feeling like they're perpetually missing out. A key theme in Pal's analysis is liquidity, which he identifies as a critical driver of asset prices. He highlights the importance of global liquidity trends, such as the Federal Reserve's actions and fiscal policies, in shaping market dynamics. For instance, he anticipates corrections, such as Bitcoin potentially retracing from $120,000 to $100,000 as part of the normal market cycle. Pal stresses that investors need to adopt a long-term perspective rather than overreacting to short-term corrections. Historically, periods of tightening liquidity have been followed by substantial rallies when conditions ease. The upcoming injection of liquidity through mechanisms like the Treasury General Account and potential rate cuts by the Federal Reserve could set the stage for another bullish phase.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
That's always the first phase of it, don't forget. I mean, if you go back to 2020, it was not until like November that ETH started really performing. It was all Bitcoin dominance. And Bitcoin dominance topped almost at the right moment. Bitcoin took off. Now we haven't got to, I think my next phraseology is going to be the banana singularity. That's when everything goes bananas. But what we're seeing is, this is a tricky market like this because what you're getting is a whack-a-mole, which is never the thing that you're owning.
It's a bull market for everybody but me.
It's what your friend owns, not what you own. And then you get like a week in the sun where everything goes up and then it goes off again. So we're not at the banana zone singularity point yet. That will come as well. That's probably, sometime Feb, March when it all gets silly. What a time to be alive. I mean, yes, look, there is an enormous amount of speculative risk taking, but this is, and I've said this for a very long time now, is the greatest macro opportunity of all time. Yes, you can be ultra safe and just own Bitcoin and you'll do very well indeed. Or you can try and figure out how to make more money because really, you got a tailwind. Everything goes up. When the music stops, a lot of this stuff goes to zero. But I don't blame people for playing the game. And the game of the biggest mid stuff, okay, that's a very big game indeed. The when Ethereum started, or Solana, or Sui, or Apps, or whatever it is, right? These things are incredible wealth generating machines. Look, there's always something to worry about. But generally speaking, let's look at the last Trump administration. So from September to the end of the year, the dollar rallied. September, the end of the year, rates went up. Same narrative. It was all about tariffs and, what's he going to do and how's it going to play out. Almost exactly as the year turned, the dollar went lower and rates went lower. So I've been producing a chart showing that global liquidity tightened and it has a 10-week lead time. And that should mean that at the end of the year, we get a correction. Now, that would not be surprising. Let's say Bitcoin gets to 120, it corrects back down to 100. I mean, that's just normal course of business. But Twitter being Twitter is losing its mind over this correction. I get messages, is this the one? I'm like, calm down. You should be expecting at least another 4 or 5 of these over the course of the next year. They're just regular, but for some reason that people are losing their minds. But once that's out of the way, usually it should be good. Now, liquidity needs to come back, so we need to see the dollar weaken. We need to see rates come down somewhat. Those are key things for us. I don't see any reason why not. And then there's a bunch of technical stuff like the draining of the Treasury General account over the period for the budget negotiations and stuff like that. And normally that's a big injection of liquidity. And the Fed are doing other rinky-dink stuff, like they're going to cut interest rates on the reverse repo, which basically is trying to force money out of money market funds and into the private sector. They've got to roll the debt, and they can't at high levels because it just means the compounding of debt. And if Elon is serious about trying to get the payments down, well, debt's the biggest one. It's now bigger than the military. So they've got to do that. The other side of the equation is we all know China's in trouble right now. Its economy's a mess. Bond yields keep falling. And really why China's in a problem is it can't stimulate without losing its currency. And it doesn't want to do that. So what it needs desperately is the US to inject liquidity so it too can inject liquidity. It needs a weaker dollar. Everybody needs a weaker dollar. Now, last time Trump got in, one of the first things he said is, we want a weaker dollar. If you think about what they want to do, they want to export US goods. They want a weaker dollar. They just want a weaker dollar. And they're going to have to do that. Is people are like, yeah, the institutions are coming and corporations are coming and governments are coming. Well, for this asset to get from 2 trillion to 10 trillion, you need a shit ton of money. It kind of has to have adoption by major people at this stage, because there's no way retail can drive Bitcoin from 2 trillion to 10 trillion. So it is the adoption wave. We were just lucky because this is the first asset known to humanity where retail were first. Virtually nobody actually owns Bitcoin. People have some, their savings, but what they actually own is everything else. Because nowadays, if Bitcoin goes from 100,000 to 250,000, we're all like, oh, find me a better asset. This is shit. I'm like, I mean, for normal people, that is the greatest asset of all time. I don't want to spend all this time looking for the outperformer, taking the risk. I would just buy Bitcoin and
go into Bitcoin
and do nothing. You could probably buy Bitcoin and ETH and do nothing for the rest of your life, and you'll be absolutely fine. But there's a game to be played, which is we want to create more money for ourselves. We didn't have it at $3 and hold it till this very day and do a massive size bet. So, for everybody, we want to make some money. We want to, as everybody on crypto Twitter says, retire your bloodline.
Pal acknowledges the structural inefficiencies in crypto markets. A lack of secondary buyers and professional capital often leads to sharp price declines when venture capitalists exit their positions. This creates an environment where retail investors, lured by the hype, often buy at inflated prices only to face significant losses. To address this, Pal advocates for more institutional money flowing into hedge funds and professional trading entities. This would lower volatility, create a more stable market, and attract broader participation from traditional finance players.
Capital formation at the core is very important, and I think they understand it. But there has to be some guidelines around capital formation or everybody scams everybody.
Right.
And we've seen that, right? If you give them a pump.fun casino, they will scam each other until they all run out of money. So yes, I think we're going to completely overhaul capital formation. And that can be for traditional assets being tokenized. Don't forget, when you speak to people like BlackRock or Blackstone, even more importantly, they own all this real estate. What they want to do is they want to get individuals to invest in their funds to keep their big funds going. And so they want to tokenize. I heard Steve Schwartzman talking about this. I was at some event speaking, and he was, they all want to tokenize their assets. On the other side, tokens have been very profitable for VC funds, but also it's a good way to bootstrap a business as well. So yeah, I think crypto is going to go through some changes, but the big change is the finance system has nothing in its way for adopting the technology now. They're not scared of anybody. So we're going to see a lot of innovation being built in finance now. And don't forget, Goldman, JP Morgan, they've been working on this for a decade. Goldman's crypto team's been around since 2015, I think. So we're going to see that innovation. The other side is all of the brands, the cultural side of stuff, from football teams to pop stars to sporting to everything, entertainment industry. It's all coming. People who needed liquidity gave it to people who had liquidity. That is all that happened at that end of the market. I focused a lot on that end of the market because it's really interesting. But the same happens with punks, and punks have been ripping in price. Apes have been going up because there is some social signifiers, not to necessarily boast, but just to have been around and understand that it kind of says you're part of the club. You have a commonality of interest, something that I'm not sure penguins do, but maybe I'm wrong. So there's an interesting structure to markets. There are more VCs and airdrops than there are secondary professional pools of capital in crypto. Call them hedge funds. It's quite funny because everyone's like, those bad VCs, they get tokens early, they dump them. What's happening with Pengu today? Everyone's taking their cash machine and selling it immediately.
It dumped to crap, huh? I didn't really look, but I saw a lot of red.
I don't know, but they've all done the same. And I've still got shrapnel of my ape coin and all of the shit that I was like, my MFA coin, you get given this stuff. It's like free money. Isn't it amazing? I've just been given 10 grand. 3 days later, it's worth 12.
I heard people who held a Pudgy Penguin at the launch got $85,000 worth of Pengu token. Okay. Anyways, yeah, it's a lot of money.
So why there was the big fall is there's not enough secondary buyers because it's retail. The hedge fund industry, which, I've got this asset manager, Xpan, which invests in crypto hedge funds. There's not that many that are of any size. And the total size of that industry is maybe today is maybe $10 billion. The traditional hedge fund industry, $4 trillion. So what happens is the VCs exit, think of that as an IPO, early IPO, and there's not enough asset managers to buy it. So prices fall 80%, 70% before they clear. And then these guys do their homework and say, what do they want to own here? Do I want to own Aptos when it comes out and dumps, or Sui when it comes out and dumps, or Monad when it comes out and dumps? Retail could play that game, but they tend not to because the retail are always the IPO buyers. Oh my God, Pengu's out today, I must buy it. Smash. But I think it's just a structure of markets thing. So I don't think we need retail. I think we need more institutional money into the hedge funds and the professional trading to have professional capital lower the volatility and make the space a little more functional.
Raoul Pal captures the essence of the crypto market's current state and its future trajectory. He combines macroeconomic insights, market trends, and practical advice to paint a comprehensive picture of the opportunities and challenges ahead. Whether it's the promise of tokenization, the rise of institutional adoption, or the cyclical nature of market corrections, Pal provides valuable guidance for navigating this dynamic landscape. As we stand on the cusp of what Pal calls the greatest macro opportunity of all time, the question isn't whether to participate, but how to position oneself wisely. So whether you're a seasoned investor or a curious newcomer, now is the time to pay close attention, stay informed, and seize the opportunities in this ever-evolving financial revolution.
Please like and subscribe my channel.